Welcome to the Deep Dive. Today, we're tackling a pretty big topic, this shift towards what's being called a multipolar world order.
Yeah, it's a major theme.
Yeah.
And we've got a real mix of your sources here, looking at it from, well, all sorts of angles.
Exactly. Bitcoin, macroeconomics, geopolitics. It's all in there.
It really is remarkable how these, seemingly separate fields are actually converging. They all seem to be signaling this pretty profound global change.
And we know you want to get your head around this stuff quickly, without getting totally lost in the weeds. So think of this deep dive as your shortcut.
That's the plan. Our mission, really, is to pull out the key insights. What forces are actually driving this transition? What could it all mean down the road?
We want to cut through the noise.
Pinpoint what really matters, yeah.
Yeah.
Get that panoramic view, but keep it focused.
Now, look, we get it. Concepts like multipolar world, deep dives into Bitcoin strategy, macro indicators. It can feel, well, a bit overwhelming.
It can be a lot to take in.
But don't worry. We're here to guide you through it. We'll pull out the really essential nuggets, hopefully spark a few aha moments.
And maybe have a bit of fun doing it. We'll try, anyway.
And remember, this whole conversation is based on the sources you shared with us, so it's tailored to what you're looking into.
Right. Relevant stuff.
Okay, let's get into it. Starting with Bitcoin. How does our source see Bitcoin fitting into this bigger picture?
Well, the first thing that really jumps out is this pretty strong assertion that the current global financial system, what the source calls the proof of weapons network, essentially the US dollar system, is crumbling, or at least perceived as being in serious decline.
Right, the proof of weapons idea, contrasting that power-based system
Yeah, economic and military might.
with what they see as a more peaceful alternative. Bitcoin's proof of work. It's a pretty bold comparison about how things might work in the future.
It is, and the speaker doesn't just see this happening now. They mention a prediction going way back to 2009 about a Great Depression of the 2020s.
Oh, right, I remember that.
And more recently, this concept of Liberation Day, they've even pinpointed a date, April 2nd, 2025, as a sort of potential escape point from the dollar's influence.
So this long-term view really frames their analysis of what's happening right now.
Absolutely. Which brings us to the recent activity, the moves by traditional finance, the big players, into Bitcoin.
Yeah, this is fascinating. Keener Fitzgerald announcing they want to raise, what, $3 billion for a Bitcoin stockpile?
A huge number. But the source is, let's say, skeptical. They draw a link between Keener Fitzgerald and what they flat out call the Federal Reserve's debt-based Ponzi scheme.
Okay, so skepticism's putting it mildly. They're questioning the motives here.
Deeply. Why are these players so embedded in the old system suddenly making such massive Bitcoin plays? That's the core question.
Then there's Michael Saylor, MicroStrategy planning to raise an absolutely staggering $84 billion.
$84 billion, it's hard to even wrap your head around.
$42 billion in equity, $42 billion in corporate debt, all to buy more Bitcoin. And the source asked, well, who's actually buying these bonds?
Right. That's the critical question. The analysis points towards banks, financial institutions, the ones managing pension funds, often through giants like BlackRock.
So the implication is pension funds are getting exposure, maybe unknowingly.
That's the concern raised. It suggests Bitcoin is getting woven deeper into traditional finance, but it also makes you wonder who's ultimately holding the risk if things go south. Maybe individual pensioners.
It fits with this other point the source makes about international lending to the U.S. government.
That it's decreasing from places like Japan and China.
Yeah, reportedly.
Yeah.
But at the same time, involvement from the Cayman Islands is supposedly increasing.
Ah, the Caymans. Often a sign of complex financial structuring.
And the interpretation here is that pensions are getting packaged up, potentially making ordinary people the ultimate bag holders for U.S. debt as these institutions scramble.
It paints a picture of a system under real strain.
Which leads to this warning from the source about potential manipulation.
By these same traditional players.
Yes. Using tools they control, like Federal Reserve rate hikes or regulatory pressure. Operation Choke Point 2.0 is mentioned.
To do what? Engineer volatility.
To engineer pump and dumps, the source suggests. Create chaos, shake out individual Bitcoin holders, and scoop it up cheap. It sounds, well, pretty alarming.
It does. The idea is they could leverage their systemic power to manipulate the market at the expense of smaller players.
And then there's this timing thing. The Department of Justice apparently dismantled its crypto enforcement unit.
Oh. When was that?
Well, the source notes the timing seems convenient happening alongside these huge institutional Bitcoin moves. You can see why that might raise an eyebrow.
That timing certainly adds another layer to the skepticism. It feeds that narrative of maybe clearing the path for these big players.
Moving on, Galaxy Digital planning to go public, Bitcoin mining,
Yeah.
investment banking.
Right. And the source uses this really interesting analogy here.
The goldsmiths.
Yeah, comparing it to how fiat currency arguably started. Goldsmiths issued receipts for gold they held.
And eventually, those paper receipts started circulating as money, maybe more receipts than actual gold.
Exactly. The source suggests a similar kind of leveraging, maybe even fractional reserve practices, could emerge within the Bitcoin ecosystem itself, despite Bitcoin's original design.
Which is kind of ironic given Bitcoin's premise.
Very much so. It highlights the tension when old financial models meet new decentralized tech.
We also hear about Charles Schwab getting into Bitcoin services, Cantor Fitzgerald taking a stake in Tether.
It just keeps coming, more and more traditional players wading in.
It seems undeniable now. They're making their moves.
And these aren't small moves. Schwab, Cantor, these are established names. It shows Bitcoin's integration is accelerating.
And the source makes a really crucial point about why they might be doing this now.
That Bitcoin has simply outperformed.
Yeah. That it's beaten traditional assets so consistently, these players almost have to get involved. They couldn't beat it, so now they join it, so to speak.
That speaks volumes about Bitcoin's resilience, its potential as a store of value that, yeah, traditional finance just can't ignore anymore.
But amidst all this institutional influx, the source hammers home a warning.
Self-custody.
Self-custody and avoiding leverage. Keep control of your keys. Don't borrow against your Bitcoin. It's a very clear message.
Absolutely critical advice. As the lines blur between TradFi and Bitcoin, the risks inherent in traditional finance, leverage, lending, counterparty risk can easily seep into the Bitcoin world too. Not your keys, not your coins becomes even more relevant.
Then there's the FDIC guidance, apparently allowing banks to hold Bitcoin and issue stablecoins without needing special permission anymore.
Yeah, that's a significant regulatory shift.
The source sees this as banks actively preparing, laying the groundwork for their own Bitcoin strategies. It's not if anymore, it's how and when.
It definitely opens the door wider for banks to participate directly in the digital asset market.
And then it's like a roll call. Charles Schwab, BlackRock, MicroStrategy, Cantor Fitzgerald, Elon Musk, even Trump, all announcing Bitcoin or stablecoin plans.
It's a flood.
And the source suggests the underlying motivation for many is similar, positioning to potentially profit from a weakening dollar while accumulating Bitcoin. Short the dollar, long Bitcoin, essentially.
The sheer number and variety of these players making these announcements, yeah, it strongly suggests a wider strategic pivot, a move away from relying solely on the traditional dollar system.
The source even floats the idea, pretty controversial, that Trump's actions might actually align more with non-America first global institutions.
That definitely challenges the standard political narratives. It points to a much more complex web of global financial interests potentially influencing things.
We also get a mention of stablecoin regulation talks, something about a possible 2-year head start for some players.
And the idea that yield generated by the reserves backing stablecoins might not get passed on to the actual holders.
Right, so the established players may be positioning themselves to capture the value, maintain their edge, even in this new space.
Those regulatory details could really shape how stablecoins evolve and whether they truly disrupt traditional finance or just get absorbed by it.
And the upcoming sentencing for Alex Mashinsky from Celsius?
Stark reminder.
A very stark reminder of the risks of centralized platforms in crypto. The lessons from Celsius, Voyager, FTX, they loom large.
Absolutely. A crucial cautionary tale about counterparty risk, about really understanding where your assets are and who controls them. Due diligence is paramount.
Finally, wrapping up the Bitcoin part, this idea of a Bitcoin strategic reserve comes up.
But not for the U.S. government, right?
No, the source thinks that's unlikely. They suggest it's more likely banks and big financial institutions building their own strategic reserves, potentially by acquiring assets, maybe even stripping assets from individuals.
Wow, that's a pretty cynical take.
It is, but it's a thought-provoking way to frame these large institutional moves. So yeah, the Bitcoin picture painted here is one of traditional finances getting heavily involved, maybe with manipulative intent, all within this context of a potentially crumbling dollar system.
A complex and somewhat concerning picture.
Okay, so that's the Bitcoin angle. Let's broaden out now. Shift focus to the wider macroeconomic forces that are feeding into this potential multipolar world.
Right, the macro view. And here, the source draws a really compelling contrast. They frame Biden's support base as primarily the military-industrial complex, think the World War II Cold War model.
Okay, and Trump.
Trump, they argue, is backed more by the banks, the financial sector, whose interests are seen as aligning better with a multipolar global structure, not necessarily U.S. hegemony.
That's a very different way to frame the political dynamic. Less about party, more about underlying economic power bases.
Exactly. And the argument follows that this transition, moving away from the US dollar as the sole global hegemon toward a multipolar system, could actually be, well, safer.
Safer. How so?
Potentially more stable for trade, maybe fewer engineered conflicts designed to prop up the dollar system. It's a significant claim that a less dollar-centric world might be less prone to certain kinds of wars.
Interesting. What about Trump's tariffs, then? How do they fit into this macro picture?
The source argues that China isn't actually as dependent on U.S. exports as many assume. They have flexibility. They can pivot by beef from Australia, soybeans from Brazil, Airbuses instead of Boeings.
So the tariffs don't cripple them.
The argument is no, not in the way that's often portrayed. It challenges that narrative of U.S. economic leverage being absolute.
And it highlights how globally interconnected things are. One door closes, another opens.
Precisely. And conversely, the source points out that America can't just flip a switch and rebuild its manufacturing base overnight.
Right. That takes time, investment skills.
So ultimately, who pays the tariffs? The source argues it's mostly the importer American businesses and eventually American consumers through higher prices.
Not the narrative we usually hear.
No. It cuts against the idea that tariffs only hurt the exporter. It suggests the cost often comes home.
The source also points to some emerging warning signs in the U.S. economy.
Yeah, a few flags are raised. A decline in GDP growth, potentially skewed by companies front-running tariffs, but still a decline. Slowing payroll growth, falling job creation numbers, consumer spending looking weaker,
Inflation.
and the GDP price index rising, yeah, signaling inflation picking up even as growth slows.
So slow growth, rising prices. That sounds like.
Stagflation, that's the term brought up. Declining growth, declining employment, increasing inflation, with echoes of the 1970s.
Which was a really difficult period economically.
Extremely difficult, because the usual policy tools work against each other. Fighting inflation can worsen the slowdown, stimulating growth can fuel inflation. It's a tough spot.
And the source argues this isn't something that could be fixed with, say, tax cuts.
No. They make a strong case that the root issues are monetary tied to the Federal Reserve System itself, and that tax reform can't fix those fundamental problems.
So the current policies, in this view, are actually counterproductive.
Worse than that. The view presented is that they're strategically weakening the dollar, maybe intentionally causing capital outflows. It's a direct critique of the current economic strategy.
A critique that suggests the fundamental monetary structure is the real issue.
Exactly. The focus is squarely on the monetary system itself.
Then there's a mention of USAID being shut down.
Yeah, and the argument made is quite pointed, that USAID's real function, hidden beneath the humanitarian aid, was to prop up the petrodollar system through covert wars and interventions.
Wow. That links economic dominance directly to geopolitical operations. A very critical take on USAID's role.
It's a perspective that sees economic power being maintained through more than just financial means, through geopolitical maneuvering as well.
So if the goal, according to this source, is to strategically weaken the dollar, what tools might be used?
Well, some pretty unconventional ideas are floated. Viewing NATO less as a defense alliance and more as a, quote, sales strategy for the military-industrial complex. Firing the leadership at the Fed. Auditing Fort Knox, questioning the gold reserves.
These are definitely not mainstream proposals.
Not at all. They represent a radical break, aimed squarely at disrupting the existing financial order and dollar dominance.
Meanwhile, we're seeing real-world shifts, like more trade happening directly between countries in their own currencies.
Right. Saudi Arabia, Russia, China, increasingly trading in yuan, rubles, rials, bypassing the dollar. That's a tangible sign of the dollar's waning grip on global commerce.
It's a practical move away from dollar dependency.
Definitely. A clear indicator of this multipolar economic trend taking shape.
Then there's talk about Trump potentially wanting to sanction anyone importing Iranian oil. What are the implications there?
Well, China is a major importer of Iranian oil, so sanctions could really escalate tensions, impacting global energy markets, U.S.-China relations, and potentially hitting the U.S. economy, too.
It shows how these trade actions can have complex, maybe unintended ripple effects.
Absolutely. Global markets are too interconnected for these things to happen in isolation.
The source also seems to feel that Trump's trade negotiations, maybe using the Panama Canal as an example, primarily end up benefiting.
Who? Large financial players, multinational corporations. The argument is that these deals might look good on paper, but the benefits don't necessarily trickle down to Main Street to the average American worker.
So it's a critique that these policies might actually widen the gap between Wall Street and Main Street.
That's the perspective offered, yes. That corporate interests heavily influence these negotiations, potentially reinforcing existing inequalities.
And this idea of bringing manufacturing back to the U.S., the source is skeptical about the job creation aspect.
Yeah, the point made is that any reshoring of manufacturing will likely rely heavily on robotics and automation.
So technologically advanced, maybe, but not necessarily creating masses of traditional factory jobs.
Exactly. And potentially, this automated future could even facilitate a kind of stablecoin-based technocracy, a system of greater control. It raises big questions about the future of work.
There's also a tension highlighted between anti-immigration rhetoric and the goal of rebuilding manufacturing.
Right. If you want to build things, you generally need workers. Restrictive immigration policies could clash with the labor needs of a manufacturing revival. It points to a potential disconnect.
So the overarching message on the macro front seems pretty critical. A transfer of wealth from Main Street to Wall Street, benefiting large corporations who then might just redeploy that capital overseas anyway.
It's a somewhat pessimistic outlook for the average citizen, suggesting a widening wealth gap and capital flight by major corporations seeking global opportunities.
A globalized economy where capital chases the best return, regardless of borders.
That's the picture painted.
And yet, amidst all this, Bitcoin ETF inflows are still hitting record highs.
Yeah, it's an interesting counterpoint. It suggests that even with these broader economic concerns, there's still significant appetite for digital assets. Maybe as a hedge. Maybe just seeking growth.
A sign that at least some part of the market sees Bitcoin as a potential safe haven or alternative.
It certainly indicates continued interest and belief in Bitcoin's potential, yes.
What about other countries? Japan is mentioned, increasing its U.S. Treasury purchases.
Yes, but the analysis suggests they might be doing that while also seeking exemptions from U.S. tariffs and potentially looking to realign more closely with other Asian powers, maybe even BRICS countries.
So, complex maneuvering everywhere. Even allies are hedging their bets.
It really underscores the shifting dynamics. Even long-standing relationships are evolving in this move towards a multipolar world.
Okay, so if we boil down the source's macroeconomic view, it sounds like a deliberate strategy is perceived.
That's the interpretation, yes. A strategy to weaken the dollar, create volatility.
Set up stablecoins as an alternative or bridge.
Go short the dollar, long Bitcoin.
Yeah.
And maybe orchestrate a big pump and dump to consolidate wealth and control.
It's a dramatic, maybe even conspiratorial-sounding view of things.
It definitely posits a deliberate, coordinated strategy by powerful financial interests to reshape the global system for their benefit, using this transition period. It attributes a lot of agency and perhaps self-serving motives to these major players.
Okay. Bitcoin, macroeconomics. It paints quite a picture.
Yeah.
Now let's bring in the third piece, the geopolitics. How do these economic and financial shifts play out on the world stage, according to our source?
Right, the geopolitical angle. And it really ties everything together. The source starts by framing Trump and Netanyahu as key figures, but representing different factions.
Also,
Trump is seen as representing the banks, the technocrats, aligning with that multipolar, financially driven world order we discussed. Netanyahu, on the other hand, is framed as representing the traditional military-industrial complex.
so opposing forces, in a way, even if they might seem aligned sometimes.
That's the framework presented. It helps interpret their actions not just as politics, but as moves within this larger power struggle between old and new models.
And the source emphasizes the link between these two sectors, banks and the military.
Yeah, that they're deeply intertwined. They invest in each other. They both profit from conflict, sometimes even, the source suggests, by shorting stocks if wars don't go according to plan. It paints a picture of a system where finance and conflict feed each other.
Then there's a pretty critical take on the role of religion in all this.
A very critical take, suggesting that religion is often weaponized, used as a tool to create conflict, justify interventions, and advance geopolitical goals. Events like 9/11 and the rise of ISIS are cited as examples within this framework.
It's a controversial perspective. arguing that religious narratives can be manipulated to mask underlying power and economic motives.
Yes, that it can be instrumentalized for very secular geopolitical aims.
The source then looks at recent events, Ukraine-NATO escalation, and the October 7th situation as tests.
Tests, exactly.
Yeah.
Pitting the old military-industrial complex model against this emerging multipolar structure, the outcomes are seen as really pivotal in shaping which way the world order tilts.
Kind of like battlegrounds for these competing visions of global power.
That's the framing. Key areas where the struggle for influence is playing out.
And the source argues that Biden's alleged mission regarding the Palestinians failed.
Yes, the argument is that the goal of, quote, ethnic cleansing failed, and that this failure is a major setback for the traditional U.S.-backed order in the Middle East.
A failure that opens the door for new power dynamics.
That's the implication, a shift in regional influence, potentially away from decades of U.S. dominance.
How does Trump fit into this specific regional context?
His initial approval of military budgets, combined with the ongoing humanitarian crisis, are seen, perhaps cynically, as creating leverage for future negotiations.
So even humanitarian crises become bargaining chips.
In this pragmatic, realpolitics view of international relations, yes, everything is potentially leveraged.
A really key development highlighted is the Iran-Saudi normalization.
Facilitated by China, that's presented as a huge deal, a major diplomatic shift in the Middle East, explicitly moving away from U.S. mediation and dominance.
A clear sign of China stepping into a bigger diplomatic role on the world stage.
Definitely. And a sign of traditional U.S. influence waning in that critical region.
We also hear about UN groups starting to leave Iraq.
Interpreted as another sign of a U.S. strategic retreat, or at least a recalibration, changing the facts on the ground.
A practical step towards maybe a reduced U.S. footprint.
That's how it's seen. A reevaluation of U.S. priorities and presence in the Middle East.
And the tensions elsewhere, like between Turkey and Israel in Syria.
Viewed as part of the jockeying for position in this new order. Regional powers testing each other, negotiating their influence within the emerging multipolar framework. It's all part of the larger power negotiation.
The economic situation in Israel is also mentioned as a factor.
Yeah, that its dire economic straits weaken its geopolitical standing and bargaining power. Economic vulnerability can definitely limit a nation's options.
Economic strength underpins geopolitical influence usually.
Almost always.
What about Sheldon Adelson backing Trump? How is that connection viewed?
It's linked back to a historical model of settler colonialism and, well, real estate deals, placing that alliance within a specific historical and economic context.
Suggesting certain long-term interests and patterns are still at play.
That's the implication.
The source also draws a direct line between U.S. policies specifically turning away from Europe economically, plus the fallout from October 7th, and Israel's current economic weakening.
Yeah, arguing that U.S. actions, whether intentionally or not, have had significant negative economic consequences for a key ally in the region. It highlights how interconnected these things are.
And there's even a prediction about Netanyahu.
Potential regime change, possibly even exile, which, if it happened, would obviously be a massive shift in Israeli politics and its regional stance.
A major turning point.
For sure.
Okay, so if U.S.-Israeli influence is potentially waning, who's gaining power?
The analysis points strongly towards the GCC, the Gulf Cooperation Council countries. Their economic influence is rising rapidly.
And this idea of reverse colonization.
Yeah, it's a striking phrase. The idea that these wealthy Gulf states, former protectorates or influence states, could become major investors in and potentially exert influence over their former colonizers or dominant powers through sheer economic weight.
A rebalancing of global financial power.
A significant one. And we see examples like Egypt reportedly using GCC funding to plan the reconstruction of Palestine. That shows tangible financial clout and regional influence.
And beyond the Middle East.
BRICS unification is key. Plus, Russia successfully selling its oil, largely to China and India, despite sanctions. Both point to a strengthening bloc outside the traditional Western sphere.
A clear challenge to the old order.
Definitely signals a multi-line system emerging.
What about South Asia? India and Pakistan.
India is portrayed as a new economic battleground, being heavily financialized, potentially becoming a kind of client state. While the tension with Pakistan, which the source claims is funded by the same networks backing India, is strategically maintained.
Wow, that's a complex and somewhat conspiratorial view of regional dynamics.
It suggests a very intricate web of external influence, potentially leveraging regional tensions for economic and strategic gain.
And China in all this.
China is seen as strengthening, benefiting from these shifts, positioning itself as a central player in the multipolar world. Its economic and political gravity is undeniable.
So putting the geopolitical pieces together, the source sees large corporations gaining power globally, wealth being transferred, but also sovereign nations outside the West building strength, particularly BRICS and the GCC. All while the U.S. dollar's dominance fades, maybe like the British pound did before it.
That's a good summary. Power becoming more diffuse, new centers of influence rising.
And India and Pakistan are flagged as current hotspots to watch.
Yes, significant potential for instability there as these shifts play out.
With the Indian diaspora wealth in the Gulf maybe being another factor?
Potentially, yes. Those economic ties between South Asia and the GCC could play a role in future alignments. It just shows how interconnected everything is becoming.
Okay, so the final geopolitical conclusion from the source is
Right. That Trump is now effectively aligned with the banking interests pushing for this multipolar, BRICS-aligned world. That the traditional military-industrial complex is likely to cut Netanyahu loose. And that Trump will be the one to deliver this multipolar order, using tariffs as the mechanism and make America great again as the narrative, even if the underlying reality is different.
that ties all the threads together, Bitcoin, macro, geopolitics, into one, well, very specific and provocative narrative about how this transition is unfolding.
It's certainly a comprehensive perspective, synthesizing all these complex shifts.
Okay, so as we wrap up this deep dive, it's clear the central theme is this massive ongoing transition to a multipolar world order. It's complex. It touches everything: finance, economics, global politics.
Absolutely. And maybe the biggest takeaway for you listening is to try and recognize the underlying patterns we've been discussing here.
Right. Our source really encourages looking beyond the headlines, beyond what politicians or mainstream media might be saying, to, as they put it, follow the money.
Consider the incentives, the financial drivers beneath the surface. Engage that critical thinking.
And importantly, while this transition feels huge, potentially disruptive, the source doesn't necessarily frame it as the end of the world.
No, more like a fundamental restructuring of how the world works.
And within that restructuring, the source suggests a path for individuals, building self-sovereignty, particularly through accumulating Bitcoin, as a way to navigate these changes and maybe protect your economic future.
The idea is that by understanding these shifts, you gain agency. You have the opportunity to position yourself, protect your family in this evolving landscape.
If you want to go even deeper into these ideas, the source apparently has an upcoming video series called Great Proxy, Great Depression of the 2020s.
And for ongoing analysis, past videos, future updates, the Bitcoin Hard Talk membership portal is mentioned as the place to go.
So if you found this conversation valuable, if it gave you food for thought, please do like, share, subscribe, and maybe check out that membership portal if you want to stay plugged into this perspective as things unfold.
Others might touch on these topics, sure, but hopefully this deep dive gave you a unique synthesis based on the material you shared.
Definitely a lot to think about. And amidst all these big, complex, sometimes worrying shifts, maybe the final message is just to keep focused on peace, love, and unity in our own spheres.
Well said. Navigating complexity with clarity and hopefully some compassion.